Uh, Welcome, guys, to the Janix channel again today, and we are going to discuss something about the financial modeling today again. But if you haven't subscribed to our channel yet, you are requested to please subscribe to our channel. Today, we are going to develop a complete financial statement in the spreadsheet. Okay, complete financial statements means we are going to develop the balance sheet, income statement, cash flow statement, and statements of retained earning in spreadsheet. And all these statements, we are intended to make it automatic. Okay, automatic means it will be interconnected and it will be linked through formulas. When we change one variable or one item of the inside the statement, it will change all the preceding results of that change. Okay, so the financial modeling is simply a tool that is built in spreadsheet software such as MS Excel to forecast a business financial performance into the future. Okay, this is the supreme objective of the financial modeling. Okay, the forecast is typically based on the company's historical performance assumption about the future, and requires preparing an income statement, balance sheet, and cash flow statements. Okay, so these are the three basic financial statements which we are going to develop in the MS Excel today. And of course, we cannot do it in a single day or in a single lecture, so it will be a series of lectures in which we are going to develop the balance sheet, income statement, cash flow statements, and after that we will develop the statement of retained earning. And afterward, for the analysis purposes, we will create some ratio analysis as well, and the sensitivity and scenario analysis we will conduct in this spreadsheet as well. Okay, and later on from there, more advanced types of the model can also be built, like the discounted cash flow analysis model or leverage buyout, and the merger and acquisition. Okay, so all these things we are going to discuss and we are going to develop in the MS Excel, which are very helpful for the people who are dealing with the financial data. Like here we have some examples. If you can see here, the financial data users are of many type, but in the broad category there can be insider and outsider users of the financial data. From the insider, let's say the first one, raising capital. Your executives and financial manager use these financial statements and the financial modeling for making decision about the uh, financing, about the raising of capital. Either they will finance the project with debt or equity, so this model will help them in taking decision or making the financing decision. Okay, the second number, making acquisition. If you are intended to acquire a business, so if you have a financial model of that company, very easily you can analyze different variables. You can change that and you can see the consequences or the ultimate results of that change. So in this decision, in the acquisition, you also need a financial model. Okay, the third one is growing the business organically, which means opening new stores and entering the new markets. So again, it's a capital investment decision which need a thorough analysis of your financial data, and that analysis can be made easy with the financial model. Okay, selling or the divesting assets and business, budgeting and forecasting. The forecasting and planning, you see, this point is the, I think, the most beneficial or the most relevant here, because forecasting, budgeting are the major decision taken by the financial managers in their business function. So if you have a well specified financial models, you can easily take these kind of financial decisions easily and in a very rational way. The capital allocation decision can also be made easy with this financial model, and afterward, the valuing of a business financial statement analysis like the ratio analysis, scenario and sensitivity analysis, and also management accounting, all these things can be made easy if you have a sound, easy and simple financial model for the analysis. So these are the some fruits or beauty of the financial models which you can have if you can build a very good and simple and sound financial model. Okay, these are just for your motivation, just to see why or what for you are going to calculate to have a financial model. So the financial model, it's a sorry guys, it is very important in your financial career. And nowadays the jobs related to finance, I mean the equity research, the financial analyst, the banks, the mutual funds, all these careers in finance needs the financial modeling skill as their requirement. That's why the financial modeling is very important, and we should know it, and we should understand it, we should learn it. Finally, the financial models are spreadsheets, financial data that is interconnected and which can be used for decision making. Okay, and that will make your decision making very easily, as when one variable or item is changed. For example, if you are going to change the amount of debt or equity or cash or receivables or account payable, so you are going just to change the only one cell data, and it will change all the results, and we can analyze the impact of such change on the financial ultimate results of the company. Okay, for example, if you want to change the amount of debt and how will it affect the profitability, we would just change the debt amount. Okay, and all results will be changed automatically, and we can easily analyze the impact of such change. So here in the example we just describe the debt amount, but we can change and check or see or examine the impact of such change of various variable, like we can change the cash, we can change the debt amount, the equity amount, the account receivable, the accounts payable, the assets, and so on. Okay, so the financial models are very important, and the financial modeling can make your decision very easy. Okay, so how we are going to make these financial models? In today's lecture we will just develop a financial model of the balance sheet. Okay, and of course in the balance sheet we are going to have historical data, and that historical data will be of, let's say, 2 years. Okay, so here I have uh, typed certain data for your help. Okay, let me explain this data to you, and after that we will start construction of this balance sheet which you are seeing on the screen. Okay, so here if you see this one, we have the 2018 data and 2019 data of this company. The very first data which we have is the stock price. Okay, the stock price of this company, let's create a name for this company. The company name is ABC. Okay, ABC. Okay, so ABC is the company name. Now I have typed certain data for you here, and I will explain this to you just to make it understandable. Okay, so we have the data of 2018 and 19. This is the 2018 and this is the 2019, and the data we have, the very first data is the stock price. In the 2018, the ABC company has share price of 29, and in 2019 it is 25. Okay, the outstanding shares in both cases is 55 million, and the tax rate is 35%. Okay, the weighted average cost of capital of this company is 11% in 2018, and it is 11.5% in 2019. Okay, so how are we going to construct a balance sheet for this company. So let me type the 2018 data here first, and let's assume for the 2018 cash and cash equivalents, let's say, is 17 million. Okay, so I will just type 17 here. The next item we have in the balance sheet is the short-term investment, and let's assume the short-term investment in 2018 is 72 million. The third one is account receivable, and account receivable we assume that 318 million, and the inventories are supposed to have 420 millions. Okay, so all these things, if you see, these are the current assets. Now we are going to calculate the total current asset. If you can see the total current assets, how are we going to calculate it is you just type equal and then sum sum. You double click on the sum and select all these values, okay, and press enter. So 827, we have all the current assets of this company. Now after this we are going to add the net plant and equipment, which means the fixed assets, and let's assume the fixed asset is of 930 million. Okay, and now here we are going to calculate the total asset, which means the current and fixed assets. So how are we going to calculate it? Just type equal and again sum and double click it, and you just because these are the total current assets, so current asset plus net plant and equipment, and press enter. Now we have the total assets of this company 1757 million. Okay, now we are going to calculate the to record the equity, liability and equity side for 2018. So I am going to write the accounts payable, and let's assume that is 32 million. Okay, and the notes payable are 67 million. These are just the hypothetical data I am putting in the financial statements, and the accruals are, let's assume we have 135 million. Okay, now the total current liabilities are equivalent to, you are going to calculate it this way. Okay, sum, and you can select all these things here. So 234 million of total current liabilities. Okay, now we are supposed to add the long-term bonds of this company, and let's assume that it is 620 million. Okay, now we are going to calculate the total liabilities of this company. So just type the equal, and after this you again type sum and double click this sum, and you select only these two things because the total liabilities are equivalent to current liabilities and long-term liabilities. That's why only these two, and press enter. So the total liabilities is equivalent to 854 million, and after this we are going to add the preferred stock, and let's assume the preferred stock is 48,000. Okay, so 48,000, and the common equity we are going to add here, and let's assume that the common equity is of 132 million. Okay, and the retained earning for 2018, let's assume, is 722. Okay, so in this line, if you see, this is the total common equity, not the total equity. Okay, the total equity, not the equity and liability. So here what we are going to do is press equal and add up only these two things, because the preferred stock, is a hybrid security. That is not the equity, that is not the debt. That's why we won't include it in the equity portion. So I'm just going to sum the two things only, and only these two things. Okay, so the total equity is equivalent to 855 million dollar of this company. And after this I am going to calculate the total liability and equity of this company, which is equivalent to, just type the equal sign and again type let's say, let me do it like this, okay? The total liabilities, which is this one, plus the preferred stock, okay, is this one, and plus you can click here the total common equity, okay, and then you just press enter, okay. So now you have the, sorry, I think I have certain I have committed a mistake. Yes, I have committed a mistake, and that is I have wrote 48,000 here instead of 48 only. So let me write 48. You see now, here the total liability and equity of this company is 1,757 million, and the total assets are also 1,757 million, okay. And as we know, the asset side is equivalent to the liability and equity side of this statement. So after this, let's complete the data for the 2009 as well, for the 2019 as well, just to finalize the balance sheet, okay. So let's assume we have cash, sorry, not in this cell but here, the 12 million of cash, short-term investment of 1 million, and let's say 382 million of account receivable, and 605 million of inventory. And now we are having the total current assets of, let me calculate it like this, yes, and now we have the total current assets of 1000, okay. Now let me add the net plant and equipment of 2019, and that is 1100, and the total assets of this company, let's see, is sum the current assets and fixed assets, okay. So the total total assets of company in 2019 is 2100. Now let me add the equity side as well. So in the account payables we have, let's say, 65 million, 105 million accounts payable, and let's say 150 million of accruals, okay. And now we can calculate the total current liabilities of this company by summing these three items: the accounts payable, note payable, and accruals, okay. And we have the current liabilities of 330 million, okay. And after this we have to add the long-term bonds, and let's assume we have 785 millions of long-term bonds. So what is the total liabilities? The total liabilities are equivalent to current assets and current liabilities and long-term liabilities. So I'm going just to sum only the two things, and that is sum current and long-term liabilities, and just press enter. So after this we have total liabilities of 1115 million in 2019. Now we are going to add the preferred stock, let's say that is 50 million, and the common stock is 135 million, and the retained earning is 800 million, okay. And now what is the total equity? Total equity in this case is sum and only common stock and retained earning, okay. So that is 935. And if we want to calculate the total liabilities and equity, I'm going to do it again the same way. So just press equal, and then you select the total liabilities, this one, 8 preferred stock, 8 total equity and liability, which is hiding here. That's why I'm just clicking here and then scroll it down, and just to select the cell H33, it's sorry 32, okay. And now press enter. You see we have the total liability and equity of 2100, and if you see the total assets of 2019 is 2100. So both sides of the balance sheets are equivalent. So this is the common way how we can construct a financial model of the balance sheet, okay. Now what is the benefit or the beauty of this financial model is that you see this is the asset side of your balance sheet. Now let's assume if I want to change the short-term investment, it will change the total assets and current assets as well. Okay, let's see, I make it make it 10 instead of 1. You see it changed the current assets and it changed the total asset as well. Okay, so and this way we can facilitate our decision making. But as you know, up till now we have constructed only the balance sheet. That's why we cannot see much larger change due to the change in short-term investment. But when we will calculate the income statement, the cash flow statement, and all the financial ratios and other financial analysis like the scenario and sensitivity analysis or the merger and acquisition models, by changing one figure we will see the change in too many places, and that facilitate our decision making. I think it helped you, and it was very easy. You can construct it on your own as well now. So this is the common method of creating a financial model of the balance sheet. In the my upcoming video I'm going to construct the income statement, the cash flow statements and statement of retained earning, and after a while I will calculate different financial ratios and the different models like the capital asset pricing model, discounted cash flow, and all the other models as well. So you are requested to subscribe to our channel and click on the bell icon so that you can have our all upcoming videos. Thank you guys, thanks a lot, bye bye.